Good afternoon. Welcome back to Big Happy Trading. Today is Friday. It is 2:51 Eastern, so the market is still open. It is grinding slow, and man, what a wild day. I created some training materials for my friends. I hadn't really shared this with anybody, but trying to keep this simple. And one of my buddies, he sent me a text message, said he saw the videos, and him and I've talked about him getting into trading. So he thought it'd be a good idea if I went over the criteria. It's a Friday, and I made some trades today, some good trades, but this was a tough day in the market. If you were not disciplined today, this was tough. This is just a bloodletting. So Friday, I think, what is today? The 27th, 26th, 27th March. Anyway, let's go over this real quick. So as I want to make sure that everyone's clear, I have one main strategy. I think simplicity is the key to trading. People who have 11 strategies and 63 indicators, and that was me in the past, and it just does not work. You've got to keep this simple. If you're going to have success, it's got to be simple. To me, simple is the only way to do this. So for my buddy, I wanted to go over this and let you know here's the rules. And I'm going to go over a few different criteria and some nuances and some setups and different things like that. But we're going to keep it real simple. So those of you who don't know, my first video I put out is an overview of how the 920 EMA cross works. So what I'd like to do is go over this. Let me get my stuff over here. I've got 53 windows open on all my screens. So in simplicity, I'm going to go over the rules, and then I'm going to go over today's chart so we can look at that together. So the concept is, if you're going to go long when the 9 EMA crosses the 20 EMA going up, you go long. On a short setup, when the 9 EMA crosses the 20 EMA going down, you go short. The execution time frames that I work with are the 5-minute for the entry and the 1-minute for a sniper entry. If you're a beginner, just stay with the 5-minute. Don't screw with the 1 minute at this time, because that's a lot of moving parts for you to handle. The stop is going to go above the 20 EMA in either direction. I set a standard 10-point stop. Now, if you get a good entry, you can have the stop much smaller, so your risk is much smaller. So yes, it's that simple. My buddy asked me, is it simple? Yeah, it's that simple. So now, there is additional confluence and things that we look at for our criteria. The VWAP, which is the volume weighted average price, and we'll show it on the screen. If you're going to go long, you want the price above the VWAP. Very simple. For shorts, you want the price below the VWAP. That's a white line. You're going to above it. We're going to go long, below. Here's the thing in the past years that I have done, and I've never seen anyone else talk about this. In the 920 EMA cross is not new, guys, but execution is everything. So here's what I do, and that I have not seen other people do, and I've learned my lesson, and we're going to go over this today, is I do a look back confirmation. So in the chart, if I'm getting a cross, and I'm getting 5-minute crosses going across, I look back for two confirmations, the two prior crosses, and did they work? If you got a sideways choppy market, this is not a good strategy. The 920 is a trending strategy. You want extended trends. Not that it can't work, but that's a lot of work. And we're going to go over that directly. But if you look back and the previous two didn't work, what in the world makes you think the third one's going to work? Third time's a charm? That's such a terrible expression, especially in trading, that you're just kind of rolling the dice, and that's not a good strategy. The market direction, if it is bearish, we're going to look for shorts, and we are certainly in bear mode. So Bullish, we look for longs. Not that you can't do it, but what I would tell you is on any ray traces and crosses down, even if you miss that entry, a bounce up to the 20 EMA, you can get some entries. And again, we'll go over that today. And your trade should be a 2-to-1. That means you're risking 10 to make 20. If you can get some better, tighter stops to lessen your risk, then if you go 5 points and you make 10, but capital preservation is critical. So if you don't set it and just leave it on 20, and trust me, I used to do that. I would let a winner turn into a loser or turn into a break even instead of just taking some off the table. So here's the indicators we use. It's very simple. We use the 9 and the 20 EMA. We use the VWAP, and I use the CCI, which is a commodity channel index. This is also very important. All indicators are lagging. So this is critical that you understand. These are lagging. They're behind what's happening in the price. And that's why I like to use the 1 is kind of watching what's happening. And this is why I use the CCI instead of the RSI. The RSI is more flowing. The CCI is faster moving, and I can see what's happening with the price. It's different. So I had questions on the CCI, so I wanted to explain this a little bit. So the CCI is faster. It compares the current price to its moving average in the deviation. It's a bunch of mumbo jumbo. The more aggressive, more sensitive, so we can have sniper entries. It moves faster. That's it. And you can go up to 200 in a lickety split second, or down to up to 200, down to 200. So this thing moves really fast, and I like that. That's better for me for sniper entries. So that's it. This is trade management. I think you've probably gotten this. We want to go 2-to-1 risk to reward. If you got a small account, you're going to have to place more than 2% of your account. And we'll monitor all this. We're not going to get deep down the weeds on this one. If you want more details on how to trade this strategy, you have questions for me, you can reach me by email, or I have a Telegram in the comments. So get with me and let me know. So what I want to do now is let's go over this chart. So this is today. Let's go to the 5 minute. Let's go back to here. So let's go to the 5 minute chart. So let's look at just today. So so you can see the lay of the land here. The blue line is the 9 EMA, the big fat line. It's mostly red. I got the fancy one that goes green and red. That's the 20. And here's the VWAP, and here's the CCI. So that's it. 4 indicators is all I use. That's it. So the opening bell today is 13:30, which is 9:30 Eastern time. I was very aggressive. This was already in a downtrend. So what I did on the first 5 minutes, I took I was in like at 3 minutes. So I took this trade I was in here already. So as soon as I saw this first candle break back in here, and I'm going to look on my other chart to show you where I got in. So I got in right here. Let me look at the other one over here. So did I get in at... Yeah, I was in at 64.80 sharp. So, and then we got this down. It almost took me out, which made me, feared up the next candle. But that's why you set the stops. So you set it. If it took me out, it was going to take me out. I set it at 10. That's close enough. And what I did is I only took... This thing got down here, and when I see them basing, I get a little nervous, okay? So when you see these candles here, 1, 2, 3, 4, and you can see the big bottom wicks here. So I took, as this thing started to move back up, let me look at my thing. No, I took 25 points. So I got 25 points out of this trade. So that's the first trade that worked out well if you're in it and it was good and you were fast. Here is a trade that I missed, and I'm very sad because this thing is just grinding down. And even right now, it's 3:01 as I'm recording this. and this thing is just grinding down to, Poopville. It's just terrible. I mean, not terrible if you're in it. So look at this. If you did this 5-minute cross, if you did this 5-minute cross here, and let's just say you were very conservative. Let's say you got in on this third or fourth candle here. So let's look at a short position here. So as this thing crossed, let's say you got in 1, 2, let's say you even got in here. You're very conservative. You put your stop right at above, as our rules are, we put our stop right above the 20, okay? And you have just been grinding down all day with zero risk. You got 44. That's ridiculous. Yeah, you would have gotten 44 points out of this thing just grinding down all day long. And you'd still be in it, still going down. Here's what I will warn you. And this has happened to me in the past. So I want to give you a warning. When you get this moving down here, you want to move your stop and you want to trail your stop and follow this. If it pops back up and takes you out, that's fine. Because here's some mistakes I've made in the past, and I don't want you to make them. Let's look at yesterday. Look at this. This is yesterday at 4:10 p.m. So if you were grinding all the way down here, all the way down, and you were in this trade, that this one candle, this 176 bar candle on a 5-minute would have wiped you out if you didn't set your stops. I mean, that's why you continue to move down, You probably would have put your stop here, and this might have taken you out right back to the 20. But, I mean, you do not want to leave. Trump makes a tweet or something happens, you can just get hammered. And I've been, and trust me when I tell you this, I have been hammered more times than I can count where I'm at break evens. Now, obviously, when a trade's going like this, I'll move it to break even immediately. That way I cannot lose money. But what I strongly suggest, and this is trade management, when you're looking at a move, and let's just say you even got in here on this move here, you really want to make sure that you are trailing your stops. I mean, you're looking down here. I mean, these are some gigantic moves. I mean, this is 70-point move if you stayed in all the way. The reality is I might have been out here at about, when this thing comes down, if I'm at 2-1 and this thing goes against me, I probably would have been out of the first trade. Now, I might have gotten back in because it's staying below. Because I trade multiple contracts, what I would do is I would have taken the first one at 20. I would have set another contract at 10, so I'm guaranteed profit. And then I would have had one at entry, so it's a zero risk trade. That's, if you're trading multiple contracts, this kind of management is important, because then if I had one at 10, it never came back to me, and the other one I have set at stop, so I still have two contracts. I would have enjoyed all of this. I probably would have taken another one here at 40 some points where this went here when it started to turn back up. I probably would have taken that second one. I would have left the runner on, and I probably would have moved, once this move came here, I would have moved it right below here, and you would have enjoyed the rest of it. So trade management, and trust me, I've taken profit too early more times than I can even begin to count. It's crazy town. But look at, so going back to today, I mean, look at this. This thing is just going into the abyss. And I'm not in this. It's driving me crazy. Holy monkey sticks. So it's Friday. I was busy. I don't like to trade a lot on Friday, but I did not think we were just going to get this kind of bloodletting all day long. This is just a grind into Nowheresville. This is terrible. Terrible for the market, but not as a trader. And that's the beautiful thing about this. I know investors, there's a lot of investors who are probably going, oh, this is terrible, this is terrible. But The market goes up, market goes down. I don't care. I make money either direction. I want to go back and look at. I want to show you if. So this is. There was basically two big trades today. That's it. I mean, you got this first one at 13 at the open, and if you get this, and then this kind of choppy sideways garbage here, and then this one. But if you hit this one, this last one, this is a monster. You're you hit a home run here, and you only need two trades if you're going to get 50, 60 points. I took 20, I think it's 22, 23, whatever the number is I got. I mean, I just took a few points out of the market, and that's it. But I traded with a little size today, and if you want to learn this, guys, and I'm going to tell you, I want to give just a little bit of context to this. I've been trading for many years, and I've tried so many strategies. And trying to catch the falling knife here. Look at this thing. As this went down here, you had 1, 2. Look like, oh, I'm going to turn around. No, I'm not. Then this 1 wick up, and then just red, 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 red. Look at these things. Red, 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 red. Don't fight the trend, man. Catching the falling knife is, and people that just trade reversals is, and I've done it. And I will trade reversals. I will, in a real choppy market, but what I do is I just do sniper stuff. So let's look at the 1 minute. Here's a perfect example. If you're just trading like the 1 minute, and you'll get some days that just go like this, just whipsaw all the way around. This is steadily going, the 20's going down. This is steadily going down. So even if you use the 1 minute as your entry today, let's go back to the open. So if you use just the 1 minute, I mean, look at this garbage here. So this is why we use the 5 minute once we're in, because this is going to make your head spin trying to get in and out on this. So that's one thing I like to go over. But I mean, you can use the 1 minute for some sniper entries. I use the 1 minute to see what's going on, and I'll use it. I'll enter a little time. Here's the nice thing about the 1 minute entries versus the 5 minute entries. So let's go to the 5 minute chart here. So let's look at the time of where we would have gotten in here at 16:15. So let's go to the 1 minute, and let's go to 16:15. So 16:15 is here, and then it comes back. And once I topped this 20, I could have been in here. So you would have been in it, and let's just say 64, 62. Versus 65, hold on, no, I'm at the wrong time frame. Oops, let me go here. Yeah, instead of 46, 43. So you got about a 10-point improved entrance if you use the 1 minute to enter on this. So that's a 10-point, that's a big difference in a trade. And the nice thing is you would have had a much tighter stop if it would have gone above the 20. So again, those are a lot of nuances that you don't need to worry about right now. But I thought I would review the core concepts of the 920 EMA cross, and I hope this is helpful to you. If you have any questions or you want to reach out to me, my email is in the comments along with my Telegram. If you can do me a favor, my son is a big stickler on this. If you can like and subscribe, I'm not huge on growing a YouTube channel, but my son is all fired up and wants me to grow it. I just want to help people and share what I've learned. And if it can help you and you can win, then that's all I want. But I can tell you, last thing I'm going to end on, simple is better. All these complex strategies, and I know I refer to it, and I might get some hate here, but ICT and a lot of these other these gap fill strategies, and not saying those don't work, but I can tell you that is a lot of complexity for me. And if you get a trend here and this thing goes on the 5 minute chart, and this blue line crosses the red line, the fat line, and I go, okay, it's going to keep going down, and I get in, and if I'm wrong, it takes me out above this. Because like you said, even if you wanted to get in here, and you don't even want a huge, you go right above this. You can have you can go right to have a 7.75 stop. You can have less than 10 points. I don't suggest it because a lot of times it'll poke through like it did here, and you don't want to get taken out. And then you can still have an amazing trade. But keeping a consistent management of entries and exits on your trades. I like to move my stop to break even as fast as I can. When this thing starts going my direction, I like a no risk trade, and I'll get right in there and have a no risk trade. So that's it. I don't want to bounce all around. That's it. I hope you enjoy it. Please, if you have any questions, get with me. Take care and have a great weekend.